Hello. Now, after discussing the income tax rates for the individuals for assessment year 1920, now we need to discuss the income tax rates for the other kind of entities. In other entities, now we would cover the entities number one, firm including LLPs, number two, companies, both kind of companies, domestic as well as the foreign companies, and at number three, we would be discussing about the income tax rates applicable to a cooperative society. Okay. Now, the tax rates for other entities were already discussed under the session of individual income tax rates, right? So here we are discussing these three entities. So please see, first, the cases of firm. In case of firms, I am talking about partnership firms here. In case of partnership firms, including LLP, the tax rate applicable is a fixed tax rate of 30%. When I say fixed tax rate, it means that there are no slab rates. It also means that there is no basic exemption limit available to any kind of firm or LLP. Okay. So a firm or LLP would have to pay income tax irrespective of their earnings at a rate which is 30%. You can see here, in case of firms, the tax rate is 30%. Whether any surcharge is applicable? Answer yes, surcharge is applicable when the income exceeds 1 crore. The rate of surcharge is 12%. Okay. Further, whether the cess would also apply? Answer yes, the cess at the rate of 4% would also apply on firms and LLPs. Okay, so this is the first one, firms. The tax rate would be 30%. It is a fixed rate. Irrespective of the quantum of income, you need to apply this 30% tax rate. Then you also need to apply surcharge at the rate of 12% only when the income of the firm exceeds 1 crore. Okay, up to 1 crore, no surcharge. When income exceeds 1 crore, then only a surcharge of 12% is to be applied. Then cess at the rate of 4% would also be applicable, and it is always applicable whenever you are computing tax for any kind of entity. Okay. Now, coming to the second one, the second SSC here is the company SSC. From the viewpoint of income tax rates, we classify companies into two. Number one, it is the domestic companies, and number two, the foreign companies. Now, in case of domestic companies, please note that when we say domestic company, it means all the Indian companies plus those non-Indian companies also who have accepted the prescribed arrangement of declaring and the payment of dividend in India. Okay, we have a prescribed arrangement how these companies who are non-Indian, means foreign companies, they should declare and pay their dividend in India. So if such a company, it complies with those guidelines, okay, then that company is also included in the term domestic company. Okay, all Indian companies, they come under domestic companies, plus other non-Indian companies who have the specific arrangement, the specific guidelines, they are complying with the specific guidelines for declaring and payment of dividend in India, then they are also covered in domestic companies. Okay, so the first case of domestic company, the tax rate for domestic companies is 30%. Yes, it is a fixed tax rate. 30% you need to apply irrespective of their quantum of income. Tax rate 30%. Okay, surcharge is also applicable, and it is applicable in two different stages, in two slabs. The first slab is that if the income of the domestic company, it exceeds 1 crore, but it is up to 10 crores, okay, then the surcharge rate is 7%. I am repeating this. See here, if the TI exceeds 1 crore, but it is equal to or less than 10 crores, then in that case surcharge is 7%. The second slab rate for surcharge, when the TI exceeds 10 crores, in that case the surcharge applicable is 12%. Okay. So in case of domestic company, the tax rate is 30%. Surcharge, if the income exceeds 1 crore but it is up to 10 crores, surcharge rate is 7%. If the income exceeds 10 crores, then the surcharge is 12%. Okay. Now you can see that there is a star mark with this tax rate of 30%. The meaning of this star mark is, you can read it here, the tax rate would be 25% for those domestic companies whose turnover in the financial year 2016-17, financial year here means the previous year, is up to 250 crores. So if the TI for that particular year 16-17 does not exceed 250 crores, then for the assessment year 2019-20, such companies would have to pay income tax at the rate of 25% and not at the rate of 30%. So it is a kind of concessional rate for this kind of companies whose turnover in the previous year 16-17 was not exceeding 250 crores. Okay. So the case of domestic companies clear now. Coming to the foreign companies. Foreign companies, they pay tax at the rate of 40%. In case of foreign companies, the applicable income tax rate is 40%. Okay. Though the rate is on a higher side, but surcharge, definitely a kind of concession is given in case of surcharge for foreign companies. It is definitely a concessional rate. See how? If the TI of the foreign company exceeds 1 crore but it is up to 10 crores, then the rate of surcharge for them is only 2%. And if the TI of the foreign company exceeds 10 crores, then the surcharge is only 5%. Surcharge in case of domestic company 7% and 12%. But in case of foreign company, just 2% when the income exceeds 1 crore but it is up to 10 crores. Where the income exceeds 10 crores, then the surcharge rate is 5%. Okay. So foreign company case, the tax rate 40%, surcharge would be either 2% or 5%. 2% when the income is up to 10 crores, exceeding 1 but up to 10. 5% when income exceeds 10 crores. Okay. Whether cess is applicable, I told you cess would always be applicable for all entities whosoever has got any taxable income and has got any amount of tax to be paid. So that would be including the cess. Only after including the cess there would be the overall tax liability of the SSC. Okay. Now coming to the last entity, which is cooperative societies. In case of cooperative society, there are slab rates. Please note that for cooperative societies we have not given any basic exemption limit. No basic exemption limit. Right from the first rupee of their income, cooperative societies would have to pay tax. Though cooperative societies, they enjoy a very big deduction under section 80P, but after applying 80P, if still cooperative societies has got certain income, there would not be any basic exemption limit. Okay. The slabs for the cooperative society, the first slab is for first rupees 10,000 of income. See here, up to rupees 10,000, the tax rate is 10%. Okay. Next slab is from 10,001 to rupees 20,000. The tax rate is 20%. And anything above 20,000 rupees would attract a tax rate of 30%. Okay. So in case of cooperative societies, the tax rate is simple slab rate. Okay. No basic exemption limit. That means for an income up to rupees 10,000 only, the cooperative society would have to pay tax at a rate of 10%. Second slab, from 10,001 to 2,000 to 20,000, the tax rate is 20%. And third slab is income exceeding 20,000 rupees, then the tax rate is 30% for the cooperative societies. The cooperative society would also have to pay surcharge. The rate of surcharge in case of cooperative society is 12%, when their income exceeds 1 crore. So up to the income of 1 crore, again the corporate societies, they don't have to pay any surcharge. The surcharge would be applicable at the rate of 12% only when the income of the cooperative society exceeds 1 crore. Further, yes, you would also apply cess, again at the same rate, 4%. Okay, so in this session we discussed the income tax rates for entities other than individuals. One very important amendment for this year is in relation to the tax rate on LTCGs, long-term capital gains. Okay, now we have a section 1038, whereby any LTCGs on the transfer of shares or mutual funds which are equity oriented mutual funds, it was completely exempted when the transfer has been done through a recognized stock exchange and STT was paid. Now the amendment is that such LTCGs, these long-term capital gains on transfer of shares as well as mutual funds which are equity oriented, and the LTCG exceeds rupees 1 lakh, then such LTCGs, they would attract a tax rate of 10%. Okay, now they are not fully exempted. If your LTCG on this account exceeds 1 lakh, then yes, you would have to pay a tax at the rate of 10% on such LTCGs. But I am not writing that tax rate here, the tax on LTCGs. Why? Because we will discuss this tax rate on LTCGs in our chapter or head capital gains. Okay, I would discuss in detail this tax rate which is now applicable on LTCGs of such kind exceeding rupees 1 lakh. Okay, so this session just tax rates, the income tax rates for various entities. This LTCG tax rate is only on LTCG. LTCG is one kind of an income only. It is not applicable to a specific entity, onto a specific entity. So here in this session we are simply studying the income tax rates applicable to a particular entity. Okay, LTCG tax rate, yes, we would definitely study it, but we would study it where? When we would deal with the head capital gains. Right? Thank you very much for this session.